Welcome to the Economy Magazine. I'm Binyamin. Tjong-Alvares with economic reports. Coming up, as the Swiss franc firms, the financial system bleeds billions, and transport fare hikes shake the Brazilian streets. First, the headlines. The banking industry and Republicans criticized a recent White House proposal to increase taxes on Wall Street and the wealthy. Most of the impact would affect America's wealthiest 0.1%, earning more than $2 million a year. The funds would pay for initiatives to boost the middle class, including tax benefits for childcare, college education, and retirement. But the proposals are unlikely to pass a Congress controlled by Republicans, who say tax rises would slow economic growth. The gap between the richest and the rest is widening fast, Oxfam said on Monday ahead of the 45th World Economic Forum in Davos. The richest 1% share of the global wealth increased from 44% in 2009 to 48% in 2014, Oxfam said in a report. Of the remaining 52%, 46% is owned by the rest of the world's richest 20%. Oxfam called upon states to tackle tax evasion, improve public services, tax capital rather than labor, and introduce living minimum wages. Shanghai's stock market tumbled to a 6-year low on Monday as Beijing clamped down on margin trading and tightened the shadow banking industry. The Shanghai Composite Index closed 7.7% lower after Beijing ordered China's largest brokerages not to open new margin trading accounts. Margin trading levels in China are at one of the highest levels in the world as investors flock to debt to purchase securities following the financial crisis. Shanghai surged 53% last year, but Monday's steep decline could indicate the start of a serious correction for the index. Brent crude oil prices dipped back below $50 a barrel on Monday as Europe's and Asia's economic outlook darkened. Brent crude futures traded at $49.46 per barrel in early morning trade, down 71 cents since their last settlement. U.S. crude traded down 81 cents at $47.88 a barrel. Traders expect oil prices to stay volatile this week with little evidence of either stronger demand or tighter supply to support a solid rebound. And as the European Central Bank readies for quantitative easing, the euro is likely to weaken against the dollar, putting more weight on oil prices. The International Agency for Renewable Energy wrapped up its annual meeting in Abu Dhabi with $350 million to be invested in clean energy. The funds will be dispersed through 7 cycles, of which the second will finance 5 projects to employ a variety of renewable technologies worth $57 million. One of the main concerns at the conference was the oil price drop, which participants feared could negatively affect plans to shift to clean energy. Total world investments in renewable energies reached $264 billion in 2014, a $50 billion increase from 2013.
A key challenge for the deployment of renewable energy to improve energy access in developing countries has been finance. And it is not just finance. It's a whole complex of issues that are added to the cost of technology.
The Swiss central bank's decision to end the cap on the franc greatly boosted the Swiss currency, but is leading to billions in losses as it ripples throughout the financial system. i24 News reporter Daniel Roth brings us the story.
Late last week, the Swiss National Bank announced that it would toss out a 3-year-old cap on the franc's worth, which sent it skyrocketing by 30%. The move has sent reverberations throughout the banking world and given pause to investors used to a predictable Swiss central bank. Meanwhile, debtors, for example in Poland, are seeing their debt become unmanageable.
The property I own is worth 250,000 zloty, and the loan I have to pay off is now 550,000 zloty. I have already paid back 100,000. I'm not able to sell the property and pay off the debt at the same time.
Some in Switzerland are taking advantage of the new reality. In the wake of the surprise move, Swiss consumers rushed to change currencies and headed to neighboring countries such as Germany to cash in on the shift. But at the same time, Swiss tourism and trade sectors are worried, as the rise will lead to visitor and export numbers declining.
I don't think it's good news for the Swiss economy regarding exchanges, regarding people who will come to visit during holidays, and regarding people, companies which export. I don't believe it's a good thing for them either. So for the moment, it's profitable to a certain category of people, but not all categories.
In advance of a likely European Central Bank announcement to implement quantitative easing at the end of this week, it is unclear what will occur in Switzerland as markets get used to the news. But as the world's economic elite gather in Davos later this week, the Swiss currency and European reality will be at the top of the agenda.
And we're joined now by Arya Chertoff from stock analyst ranking company TipRanks for a discussion of what lies ahead in the markets this week. Mr. Chertoff, thanks for joining us.
It's great to be here.
Yeah, so what are the companies we're looking at this week?
So we're looking at IBM, Netflix, and eBay. All three are reporting earnings this week. And there's some interesting things going on. So we'll start with IBM. They're going through a massive reorganization, restructuring, mostly to focus on software as opposed to hardware.
Right.
So they're going to focus on things like cloud computing and their artificial intelligence system, Watson, mobile security, things like that.
Which presumably has a good impact on the share price?
Well,
yeah. The fact that they're splitting up, or it's kind of priced in already?
Well, it's actually been hurting them. Restructuring can do that. But they're, software is a much bigger trend than hardware now, so there's a lot more growth there. It hasn't really hurt their innovation, though. They still top the patent list for 2014 for the 22nd consecutive year. They filed 7,500 patents in 2014. So they're still innovating, but they need a restructure to adapt to current business trends.
Right. Okay. They're not necessarily top of the game anymore, so to speak.
No, but we'll see what happens because just making that move means that they're trying to match what's going on in cloud computing and all these trends.
All right. Well, let's move to Netflix, which definitely is top of the game.
Yeah. Well, for now,
right?
Yeah, they're facing some pretty heavy competition now from Amazon, which is coming into the market. Still, they have over 50 countries with 50 countries with some 50 million subscribers, streaming movies and TV shows. Now they're looking to expand into Australia and New Zealand, which will start in March. And they're also hoping, there are rumors that they're also hoping to expand into Asia as well. Right. Interesting
to see where that goes. Yeah.
Yeah, I mean, there's definitely a lot of potential there, given the population in countries like Japan, China, even South Korea.
Right. Okay, and eBay.
So eBay, they announced at the beginning of 2014 that they're going to split up with PayPal. Each side, basically, each half is going to focus on their own business opportunities and challenges. eBay, for instance, is facing competition with Alibaba, and PayPal, of course. Apple also just came into the payment industry, so they're going to see some competition. The interesting thing about both eBay and IBM is that we noticed that TipRanks an interesting difference between analyst opinion and blogger opinion. Analysts, for the most part, have been very neutral on both of those companies, whereas bloggers expressed more bullish opinions. So we found that interesting.
Okay, good. Yeah. So, Arya Chertoff from TipRanks, thank you very much for joining us.
Thanks for having me.
Thanks. Just a year and a half since the vinegar movement protests rocked Brazil's streets, discontent once again reigns following the latest round of public transport fare hikes. More in this report by Entrepreneur's reporter Anthony Lasme.
In Sao Paulo, the economic capital of Brazil, several thousand took to the streets to challenge an increase in the cost of public transportation. Last week, the ticket price increased 13%, while inflation over the year was 6.4%.
It's a significant increase given the fact there's already a portion of the Sao Paulo population who don't use the bus or the metro because they don't have the financial means. So a hike like this means that other people will have to forego these services because they can't afford them.
Anger in Brazil has been fueled by a corruption scandal at the center of the national gas company Petrobras. While 39 people were charged with corruption, many more are under suspicion.
Every year, the price of public transport goes up in Rio de Janeiro. This is possible because of our transport system in the hands of the mafia.
The Rio prosecutor challenged the increase, saying that the rate should not exceed inflation, but his appeal was rejected. Now there is a growing threat of a repeat of 2013, when millions took to the streets in protest.
This year's demonstration in 2015 are already bigger at the start than those of 2013, so we believe in it. We can get this abusive hike cancelled.
Just re-elected President Dilma Rousseff risks a new crisis in this moment, especially since growth projections are close to zero. As well, Joaquim Levy, the new neoliberal economy minister, announced a reduction in unemployment insurance and a suspension of government subsidies, which had prevented a rise in electricity prices. Brazil may be facing a challenging few years ahead.
And I-24 News reporter Daniel Roth joins us now in the studio for a look at some stories from the world press in Media Watch. Daniel, thanks for joining us.
How's it going?
Good. More inequality in the world?
More inequality, a subject that we rarely touch on here. Of course, we touch on it all the time. Davos is coming up this week. The World Economic Forum been getting together for the last few decades since
45. It's the 45th.
45th year. Yeah, 1970 was the first year that the World Economic Forum got together, and Davos is kind of the flagship event. At this point, you're talking about 2,000 to 3,000 executives. You're talking about heads of state. Matt Damon was there last year. Of course, the most important name.
Heads of state, Matt Damon. Yeah,
heads of state, Matt Damon.
Right.
It's,
right.
But actually, the big news isn't what's coming out of Davos. It's what's pushing the agenda there, and that's Oxfam of all things. Oxfam had a huge success last year pushing this agenda of speaking about inequality. They in a lot of ways put it on the map for this one of the most important forums economically speaking in the world. They did the study and released the results right before the conference last year, saying 85 people own half the world's wealth. Right. This year, of course, as you reported earlier, they tweaked the numbers a little bit. They said 1% of the world's, they presented it in a new and yet still just as shocking way. The kind of the staggering numbers that we're talking about. We're talking about, and actually, by the way, one of the things that came out of the study this year is that number, 85 people who own half the world's wealth, is down to 80 people. And over the last few years, it's dropped from nearly 300 to 80 people. So not only is there gross inequality, but we're talking about inequality that's getting worse and worse. And of course, we've seen in the last year, Thomas Piketty's book, we've seen the Pope, bringing inequality to the fore in the Catholic world. Even Christine Lagarde.
But yes. To what extent does this really make a difference? I mean, we're talking, the World Economic Forum, we're talking the people who rule the world economically, politically, obviously also Matt Damon.
and Matt Damon, let's just be...
we see Davos now in the background. To what extent do these people really care? And beyond that, okay, so 85 or now 80 people, control the majority of the wealth of the world, but I mean, people like us are still considered to be part of that 20% that rules the rest. Right.
We're not of the 80% that owns just over 5% of the wealth. It's true. What we're talking about, what Oxfam is doing, what they're spending all this money doing, is shifting the conversation ever so slightly. So people like us talk about it in newsrooms. People like the people in Davos talk about it over coffee and champagne, depending on the time of the day.
Caviar.
Caviar, only the finest for Matt Damon and the heads of state.
Yes.
What they're doing, what all that money, all that press and pressure is going towards is just changing the conversation ever so slightly. So when you think of wealth, when you think of inequality, when you think of economics as a subject, it pops into your head and you remember that there's gross inequality in the world. Something that even 5 years ago, 10 years ago, people couldn't quite put their finger on it in the same way. And of course, I think that Oxfam and people who are trying to sort of focus on alleviating inequality are thinking, well, step one is really to admit we have a problem. And admitting we have a problem means kind of from top to bottom dealing with education, dealing with changing hearts and minds.
How people see
even
the
a little
world,
bit.
so to speak. Okay. Well, Daniel Roth, thanks for joining us.
Thank you.
That is the end of our Economy Magazine for today, your daily source for economic and financial reports at Times 24 News. I'm Binyamin Tjong-Alvares. Thanks for watching. Join us again tomorrow and send us your comments. Thank you.